Firstly, what is MFRS8? MFRS8 was introduced by Malaysian Accounting Standard Board (OMASB) in 2009. It set out guidelines for reporting operating segment in financial statement and interim financial report. It also sets out disclosure requirement for product and services, geographical areas, and major customer. Lastly, it helps users of financial statement to first, better understand the entity's past performance, second, better assess the entity risk and return, and third, next, an operating segment is a component of an entity, first, that engaged in business activity from which it earns revenue or incur expenses, including inter-segment transaction. Second, whose activities are regularly reviewed by the chief operating decision maker for resource allocation and assessing performance. Third, for which discrete
The Chief Operating Decision Maker or CODM is a function rather than an executive with a specific title. This means the CODM is responsible for allocating resources to different operating segments, assessing their performance, and devise business as well as market strategies. An entity shall also disclose information to enable users of its financial statements to evaluate the nature and financial effects of the business activities in which it engages and the economic environments in which it operates. The Chief Operating Decision Maker or CODM is a function rather than an executive with a specific title. This means, for instance, the CODM of FAR570 is its founder, Group Managing Director, and Group Chief Executive Officer, Loy Tuan Ee. He has held this position since 24 March 2010. He is responsible for the overall strategic direction and management of the company's operations. He reviews internal management reports at least on a quarterly basis to assess the performance of each segment and to allocate resources accordingly. The CODM also oversees the entire supply chain, including the management of farms and manufacturing facilities. Next, the primary decision maker of Tertiary Milk Industries Berhad is the Board of Directors. The CODM within the BOD is the Managing Director, Ramjit Kaurviri, who has been appointed since 2nd July 2021. She leads the operational decision-making for the company, including the full transition of production to the new Bandar Estate manufacturing facility. The BOD also regularly reviews the financial and operational performance of business units to ensure alignment with the company's strategic objective and goals. There are two types of segmental reports. A geographical segment focuses on how a company's operations are divided based on regions or locations. For example, a business may report performance separately for Asia, Europe, and North America. This helps stakeholders see how each location contributes to the company's performance. An operating segment focuses on the different lines of business or activities within a company. For instance, a company might report separately on its retail division, manufacturing division, and technology services. Overall, presenting financial information by segment provides insights into how each area contributes to the company's overall performance. As for FAR570, they have two reportable segments, which can be referred to in notes to the financial statements number 27. Firstly, the operating segments are divided into Malaysia operation and Australia operations. These segments are managed separately because they operate in different business environments and require different marketing strategies. As you can see, for the year 2024, the Malaysia operating segment contributed the highest revenue of RM 700.6 million, while the Australia operating segment recorded revenue of RM 109.8 million. This indicates that FAR570 is heavily dependent on the Malaysian domestic market. This type of report is valuable because it breaks down the company's consolidated financial results into distinct business units, which allows management to monitor business activities. Secondly, the type of segmental report is the geographical segment report. FAR570 geographical segment information is presented based on the location of customers. The group generates revenue from several geographical regions, including Malaysia, Australia, Singapore, and Brunei. This allows management to analyze revenue performance across different countries and understand the contribution of each region to the group's total revenue. Geographical segment reporting also helps the company identify growth opportunities and manage market expansion strategies in different locations. Based on the snippet, Malaysia recorded the highest revenue contribution of RM 760.9 million, followed by Australia with RM 109.8 million, Singapore with RM 29 million, and Brunei with RM 0.6 million, showing that Malaysia remains the group primary market for the year 2024.
One key benefit of segmental reporting is that it enables users to evaluate the performance of different business segments within a company. By breaking down financial information into smaller components, users can identify which segments are performing well and which are underperforming. This also allows users to assess the specific risk and return associated with each segment. For example, based on the segmental information of Dutch Lady Milk Industry Berhad, for the quarter ended 30 June 2024, revenue increased from 351.2 million in 2023 to 360.9 million in 2024. However, profit after taxation decreased from 24.3 million to 22 million. This indicates that although sales improved and profitability declined, this is possible due to the higher operating costs or increased raw material prices. Therefore, segmental reporting provides valuable insights into not only growth but also efficiency and cost management within the segment. Another key benefit of segmental reporting is that it allows users to view the company from management's perspective, specifically that of the Chief of Decision Making (CODM). Segments are disclosed based on internal report used by management to allocate resources and assess performance. This provides users with insight into how decisions are made and which areas are considered strategically important. For instance, FAR570 Berhad reports the segmental performance based on geographical location, namely Malaysia and Australia. The segmental report shows that the Malaysia operation contribute the largest portion of revenue of 223.8 million for the current quarter compared to 25.4 million from Australia. This indicates that management places greater focus, resources and strategic attention on the Malaysia market.
An interim period is a financial reporting period shorter than a full financial year. For example, it may be quarterly, half-yearly, or monthly. An interim financial report refers to a financial report containing either a complete set of financial statements as described in FAR570 or a set of condensed financial statements as described in the standard for an interim period, depending on what is appropriate and required. The objective of this standard is to prescribe the minimum content, including disclosures, and identifies the recognition and measurement principles that should be applied in interim reports. The goal is to ensure that timely and current financial information is provided to users between annual reporting periods. Interim reports allow users to understand the financial performance and position of the company during interim periods, enabling them to evaluate the entity's financial position, performance, and cash flows on a continuous basis.
For this question, the significant event for company Dutch Lady. First, investment in New Industrial Revolution 4.0 or known as IR 4.0 manufacturing facility. As you can see here, property, plant and equipment PPE increased from RM 503.2 million to RM 547.9 million. This growth is driven by the construction of a state-of-the-art IR 4.0 manufacturing and distribution facility in Banda Aceh, which was officially inaugurated on 30 May 2024. The company is currently in the process of transitioning production from its Petaling Jaya site, which is expected to be fully decommissioned in Q4 2024. This strategic expansion facilitates long-term growth and solidifies the company's position as a leader in the Malaysian dairy industry. However, it also results in high accelerated depreciation and one-off operating costs totaling RM 14.7 million in Q2 2024 alone, which temporarily reduced reported operating profit. Next, commencement of intercompany borrowings. As you can see in this statement, current borrowings rose from RM0 to RM 28.6 million. In Q2 2024, the company made its first drawdown of $6 million, equivalent to RM 28.6 million, from an available $26 million, which is RM 122.2 million intercompany revolving credit facility. This move ensures the company has the necessary financial resources to complete the construction and smooth transition to the new Banda and stake facility. While it increases the company's liabilities, it prevents a shortfall in working capital caused by heavy capital expenditure. Let's move to company FAR570. First, acquisition and full integration of subsidiaries Xinhua and Inside Scoop. Revenue is increased by 25.6% from RM 198.3 million to RM 249.2 million. For gross profit, it is surged by 60.6% from RM 52.2 million to RM 83.8 million. This growth was primarily driven by the full quarter revenue contribution from Xinhua Ice Cream and the integration of Inside Scoop. This represents a strategic shift from being just a liquid milk producer to becoming a major player in the high-margin consumer packaged goods (CPG) ice cream and confectionery markets. The transaction diversified the group's income streams and significantly improved profitability. It moved the group into high-margin product categories, allowing them to report a 106% increase in profit after tax compared to the same period last year. Lastly, strategic reduction in global and Australian raw material costs. gross profit margin expanded from 26.3% to 33.6%. Meanwhile, farm gate milk price decreased by 11% in Australia starting July 2024. The group benefited from a significant transaction-related cost relief due to lower global price for whole milk product and a double-digit reduction in the seasonal farm gate price at their Australian operation. This cost reduction directly strengthened the group's bottom line. Despite facing higher selling and distribution expenses up from RM60.5 million to RM23.2 million, the lower input cost acted as a buffer leading to an operating profit increase of RM50 million for the quarter.
Now, I would like to start with the types of interim financial statement. Interim reports consist of statement of profit or loss and other comprehensive income, statement of financial position, statement of changes in equity, and statement of cash flow. Let me explain about the interim report of Dutch Lady Milk Industry Berhad Quarter 2 in 2024 interim financial statement. This period are important because MFRS 134 required company to present both current and comparative figure for purpose analysis. For statement of profit or loss and other comprehensive income, Dutch Lady Milk Industry Berhad present two set of periods. First, the current quarter covers 3 months ended 30 June 2024, starting on 1st April 2024. Then, the comparative quarter is 3 months ended 30 June 2023, starting on 1st April 2023. For the year to date, Dutch Lady Milk Industry Berhad reports the financial year ended 30 June 2024, starting 1st January 2024, compared to the year ended 30 June 2023, starting 1st January 2023. This allows users to compare short-term quarterly performance as overall yearly trends. For the statement of financial position, the reporting periods are slightly different. The current reporting date is at 30 June 2024. Next, the comparative reporting date is at 31st December 2023. For the statement of changes in equity, Dutch Lady Milk Industry Berhad reports current starting from 1st January 2024 to 30 June 2024, while comparative interim reports starting 1st January 2023 to 30 June 2023. Lastly, the statement of cash flow current period starting 1st January 2024 to 30 June 2024, while comparative period starting from 1st January 2023 to 30 June 2023. Now let's move on to the interim report of Farm Fresh Berhad. For statement of profit or loss and other comprehensive income, Farm Fresh Berhad present two set of periods. First, the current quarter covers 3 months ended 30 September 2024, starting on 1st July 2024. Then, the comparative quarter is 3 months ended 30 September 2023, starting 1st July 2023. For the year to date of Farm Fresh Berhad reports, the financial year ended 30 September 2024, starting 1st April 2024, compared to the year ended 30 September 2023, starting 1st April 2023. For the statement of financial position, the current reporting date is at 31st September 2024. Next, the comparative reporting date is at 31st March 2024. For the statement of changes in equity, Farm Fresh Berhad reports current starting from 1st April 2024 to 30 September 2024, while comparative interim report starting 1st April 2023 to 30 September 2023. Last but not least, the statement of cash flow current period for Farm Fresh Berhad starting 1st April 2024 to 30 September 2024, while comparative period starting from 1st April 2023 to 30 September 2023. This shows how operating, investing and financing cash flows have changes throughout the year compared to prior year.